Hey bros, welcome back to another video. Today, I'm going to show you a well-proven strategy. It's a high probability strategy that has recently been through a small update that will lower your fees and earn you so much more money in the long term to help us hit that $1 million a lot sooner. I'm going to share with you the entire process, how you can automate everything in Interactive Brokers in this video. So for those of you who are new to my channel, my name is Gerald and I'm a former national shuffler turned personal finance YouTuber in Singapore. So if you have any questions about building your wealth, feel free to connect with me in my group chats. I love helping people build their wealth and let's all big together. I want to show you step by step the entire process on how to set it up and you can sleep and forget it. So if you want to skip the explanation, you can just jump right into it, or you can stick around and listen to the explanation and the calculations to how fast and what is the expected result for you to, let's say, be able to hit $1 million. So stick around to find out how crazy the numbers can get. So once you've set up and verified your account, what you need to do is to turn on fractional shares trading. Just head over to the search bar and type fractions and you would see this option pop up. Click on it and ensure that the checkbox is ticked. Once done, be sure to hit save and now head over to the trade tab. Click on recurring investment. So in this page, you can see all the recurring investments that you have set up previously. You can modify it, or if you don't have one, you can click create one right now. So there's a ton of different companies that you can choose from, but for this example, I will stick with SPY. Or what I would actually talk more about in the later part of this video is to choose CSPX or UVAA. So once done, you need to set the amount that you want to buy monthly. If there is no expiration date, you can just check the checkbox and click confirm. And that's how easy it is to set up on the Interactive Brokers side. Now, the question is, even though Interactive Brokers wants to buy monthly, where is the money going to come from? It needs to come from your bank account. So now let's head over to our banks to link the other part of the equation, which is to automate the transfer. So every month, the money goes from your bank straight into Interactive Brokers. So the first step is to find the bank transfer information in Interactive Brokers. To do that, head over to Transfer and Pay tab, click on Transfer Funds. So if you already have a bank account set up, you can just go ahead and proceed with the on-screen instructions. If you don't have a bank account set up, you can use or add a new deposit method. So in my case, I'll be choosing the Singapore dollars, but it should be the same for different currencies as well. So click on Get Instructions and fill in your bank information. EBS, account number. So choose the frequency of the top-up and the date. And if you'll be making this transfer regularly, you can just leave the end date as blank. So once done, click on Get Transfer Information. So before you can use this transaction, you do need to confirm. So there's an additional step where you need to log into your account and hit Confirm Deposit. So now we're going to do my 2FA once done, and the payment instructions should appear. Okay, success. So once you see the success page, the most important information that you need to get are your bank account number, because it's going to be DBS Bank, and your payment reference information. So do take note, this is as of 30th of March 2024. This bank account details may change, so just pay particular attention to where you're sending to. Okay, so over here, go to transfer, click to add new POSV DBS recipient. So then just add the brokers. Click next, click submit. Once done, new recipient is successfully added. Go transfer, more transfer service. Set up standing instruction, Interactive Broker. So this one is really important. So the reference you need to find this. The reference yours will probably be different. Choose the bank card. And set it up, and then you can set it up. So that's how you set up the recurring investment in Interactive Broker. Let's now talk a little bit about the strategy and understand, what is the risk, who is it good for, and is it really effective, as well as any other problems that you should take note of. As with all investment, you must do your own research to understand if this is suitable for your own situation, because everybody has a different situation. This method is commonly known as dollar cost averaging into the index, in particular the S&P 500 index. So for those of you who are new to investing, this is basically passively investing in the top 500 companies in the US market. A lot of these big companies have global exposure such as Apple, Tesla, which makes this quite diversified. Bear in mind, it's slightly heavy on the tech sector, but it's getting into the nitty-gritty detail. So there's several reasons why this strategy is one of the best passive investing strategy that even Warren Buffett, the world's best investor, even mentioned it in the interview. So 4 key reasons why. The first is that you're not betting or risking your investment money on an individual or a team's judgment. So you don't have to worry about, in future, let's say someone passes away or someone takes over the portfolio, you don't have such risk because it's pretty automated. The second thing is that you're diversified across 500 of the top companies in the US automatically. The third part is that because it's such a simple automation strategy, there isn't a hedge fund with deep, investing cost, and therefore they kept all these savings to you in the form of low annual fees. And the last but not least is that it has huge liquidity. This means if you want to exit, say you want to cash out 100 million in one day, it is possible, and you can expect that you will not be making insane losses trying to sell everything at fire sale price on the same day. You probably can sell it at good prices. And there's been a lot of historical data to show that betting on the market, which is the S&P 500 index, produces insane returns over the long term. This strategy has proven to be so effective that it beats professionals over and over and over again. This means it probably beats most of your investment-linked investment policies as well. But there are a couple of issues in this investing method. So the first is that it's very volatile. So if you are planning for a big purchase in the short term, let's say you're going to buy a house at the end of this year, you are putting a lot of capital at risk because you don't want to buy high and sell low. But over a long period of time, say 10, 20 years, it's well documented to be a good return based on historical data. Which brings a new point, which is this is based on historical data. Even though it's 50 years of good data, it may not necessarily represent the future. It is most probable, but nothing is certain. And that is why you need to understand if investing in S&P 500 suits you, and therefore the research. So based on history, this has produced an average of 7 to 10% compounded annually. Just compare that to our CPF and you see it makes a huge difference over a long period of time. But there is more problems. So when you invest in the S&P 500, every year you're gonna get dividends. And as a Singaporean investing in the US stock market, or if you're Malaysian, you would be slapped with a 30% withholding tax. Additionally, this after-tax dividend is going to be sitting in your investment account doing absolutely nothing. So this means if you invest, say, for 30 years, right? The dividends that you get in year 1 is going to be sitting, not working for you for the rest of the 29 years. So do you like money that's not working for you? I don't really like it. And that's where the Irish domiciled ETFs come in, because it's basically investing in the S&P 500, but because Singapore has a tax treaty with Ireland, we get to save 15% on dividends tax. And the second big benefit of the Irish domiciled ETFs is that they have accumulating ETFs. This means that your investment will be automatically reinvested for you. So this means less tax and no idle money sitting in your bank account. And that is what makes this a true set and forget strategy, where you can set it up once and never ever forget investments, but pretty much keep hands off for a very long period of time. So if you look at the historical returns of the S&P 500 index, you can see that in the last 10 years, which is a really long time, every single year, the index has produced an average of 12.86%, which is insanely high. Let's assume we have almost 2% in fees, dividend withholding taxes, or when you try to top up to IBKR, change currency, there's fees everywhere. Let's assume we get a 10% compounded return. And you start with $10,000 every single month, you add $1,000 over 30 years. You know what? To make it 40 years, compounded annually, we get $5 million. But let's see when we would actually cross that $1 million mark. We cross it at year 23. We can cross that $1 million net worth mark. If $1,000 a month is too expensive, let's bring it down to $500 a month and see when we cross that $1 million mark. So it takes 4 more years if you halve that money. So if you only invest $500 a month, you can get $1 million in 29 years. And what we can see from this is that it only goes up exponentially. So the key factor here is to stay invested for the long term and to invest regularly. There are some things you do need to look out for when using IBKR's recurring investment feature. So the first thing is that you can only invest in stocks that support fractional shares. But IBKR has been expanding their selection of shares that you can invest in. So hopefully some days they can invest in Singapore shares and we can dollar cost average into Singapore shares as well. The second really important point is that interactive brokers will automatically use margin, and margin, if you're not sure, means borrowed money if you don't have enough cash balances in your account. So you must ensure that your gyro, your automatic transfers work fine so that your account has money. And the second point is to ensure you turn off your margin so that you'll never borrow money. You'll just fail to buy, instead of borrowing money and pay huge interest off of that money. And the third point you need to know is that by using this recurring investment feature, they would use the standard fixed structure instead of the tiered structure, which starts at 65 cents more expensive compared to the structure. And point number 4 is that if you do not have enough US dollars in your account, but you have enough Sing dollars, what interactive brokers will do is they will auto-convert available currencies to be able to fulfill that order, and that conversion will cost you $2 every time. So if you try to put all of this in perspective, by automating this process, they charge you essentially a convenience fee of at least $2.65 per month. Is that really worth your time? That's up to you to decide. But what I found is that it is possible to further reduce your cost basis. Where you can save is on the auto conversion fee. So if you're investing small sums, let's say you're investing $50 a month, it doesn't make sense to pay $2 to invest $50 every single month. So what you can do is that in your interactive brokers account, instead of sending Sing dollar in, you can straight away send US dollars in. So let's head over to interactive brokers again. So again, at interactive brokers, click on top ups and choose US dollar and enter your DBS bank account information. So on your DBS side, to set up recurring fund transfer, you need to log into your account, click pay and transfer, but this time click on the overseas icon. So the difference here is that when you set up the transfer, you need to click paying in US dollars. So what this does is that DBS will automatically convert your Sing dollar to US dollar and send to interactive brokers US dollars every single month. And therefore, you will not need to pay these conversion charges, but you need to bear in mind that DBS has a much poorer conversion rate compared to interactive brokers. So I really would only recommend using this DBS convert feature if you're topping up less than, say, 150 Sing dollars every single month. If you want to be even more extreme, I did hear a Redditor say that you can automate the transfer. So you get DBS to automatically transfer to your Revolut, and then your Revolut auto-convert and send the US dollars into your interactive brokers account. I have not tested this, but if you are only investing $50 a month, I'm not sure if it's worth all the hassle to try and optimize that 0.1% in order to save an extra couple of cents every single month. So I hope this video was helpful. If you want to learn how to automate your investments in other investment platforms, do let me know which one you're curious to find out, and I'll do a tutorial on how you can do it and make that $1 million a lot quicker. I wish you all the best, and I'll see you in the next video. Take care and stay safe, everyone.